Live streaming is on.
Hey, good morning, everyone. And one of our managers, our directors, Chitra, gave me a hard time this week because I said that on a conference call. So she thought we were tuning into the world from here. But thanks for joining us. We have more and more people that are joining us and subscribing each week, and we thank each and every one of you. And we're here on a Friday morning and Friday evening where you are, Daniele, at the World From Here. And we're going to continue the discussion that we had last week about DeFi and valuations, the stock market, part of the people, and then also how BlockCerts is taking a role and taking part of that. So let me introduce those leaders that I get to question every week. And Daniele Mensi, who's the president of FusionSTX. Thanks for joining us from Italy.
Hey, Dan, how you doing?
Doing great, thanks.
I'm in the summertime. Today is 25 degrees Celsius here in Rome. It's crazy.
Beautiful.
Amazing. Yeah.
Wow, a place where we all want to be.
Yeah, absolutely. You see a little bit tanned today.
Great. Sounds great. And then we have Mr. Tim Vasko, who's the CEO, founder, and chief architect of BlockCerts Blockchain. Good morning to you, Tim.
Hey, Dan, how are you? Good morning, good
Great.
evening.
Yeah, awesome.
Welcome everybody to the World From Here around the world.
Yeah, and this morning, Tim, we were talking about just how quickly these weeks go, but it's just amazing when you have so many things that are happening. And we even saw more that happened this week in the DeFi market. And first, before we get started, I'd like to just welcome some new individuals that I see that are on our call here this morning, on our webinar, who have joined our token community. I'd like to welcome JD. Thanks for joining us, and also Kevin and Jim, Michael, and we have others that I won't mention, but would just like to thank you as being a part of joining our community. So also I see that Mark Smedley's joined us. Good to see you there, Mark. Mark was with the FDIC early in his career and is an executive in the finance area, and so it's great to have people like you join us as well. So this past week, we saw even more people that were chiming in, that were preaching the gospel of DeFi, and we saw Elon Musk starting to tweet about Bitcoin and DeFi. We also saw the owner and billionaire owner of Dallas Mavericks, Mark Cuban, that held a couple different conferences about DeFi, and he was asked about what one or two things do you think are ready to explode for the next 10 years, and he stated DeFi as one of those two things. So pretty amazing that that kind of press that we're starting to get about what we were talking about last week. So one thing I'd like to do just to start, we've got a lot of new followers, and Tim, what I'd like to just ask you is to define what is DeFi, why is decentralized important, and kind of what's the role that we play in this. I want to ask you that as well, Daniele.
Thanks, Dan, and thank you everybody for joining us today, and those of you that are new, and some of the people, we have to pull Mark out of the shadows there and bring him on one of these, because Mark,
I asked him that last night, so he's
very brilliant guy in this stuff. But let's break it down. DeFi. D stands for decentralized. Fi stands for finance. Pretty basic. Decentralized plus finance. And I think what's interesting is this whole idea of what's happened with GameStop, what we're seeing with all of these cryptocurrencies, new business models and financial models, or really financial models leading business models. And reality is this has been happening for a long time. I think it was last week when I pulled up in 2015, I was talking about this. So here we are 6 years later, and our article, Look Who's Killing the Great Chiefs of Wall Street. It's not new. That's the whole thing, is it's not new. We're just now getting to a point where people recognize that these systems we had are flawed, and that there are really powerful forces out there that can move markets literally, and we're seeing it in a very visible standpoint. So what I'd like to do today is demystify a lot of this. it's stuff that's been happening forever, really. And it's what gave us the future that we sit on today, what we've been building around for BlockCerts for the last 10 years. So to me, it's like, oh, well, okay, this is really great marketing because it starts showing people a lot about what's going on. And it's all over the media, Dan. It's all, and everybody, it's all over the press. Here you go, The Economist, the real revolution on Wall Street right here. And high tech meets high finance. We've been talking about it in the world from here, and quite often we've mentioned technology and money are the same things. We've said many times. Tell me which one of those you can do without. All right? Decentralized. Let's break down decentralized. Decentralized, distributed means there is no one single authority or controlling entity that can really keep contained all this information anymore, and or can block others out. That's really what you saw with GameStop. And so when we get into that, let me just show this. Like let's look at this on how big a deal that was all over.
GameStop is struggling video game retailer shares were worth a few dollars in 2020. By January 28, 2021, they peaked at over $450.
So look at that. All right. Now, when we look at that, we look at what happened, what actually was going on, and it was really about this idea of a decentralized community taking on a centralized community. So what we saw that the GameStop community, if you will, or the Reddit community came in and said, we're going to market against what the bet, Wall Street Bets, was on this particular stock. That's decentralized. It means that we're going to get out there. Everybody who's part of that community and in the know is going to drive it up, and we're going to do this in a coordinated fashion. So there was a lot of authority out there, but it was decentralized authority, not centralized authority. And now you can see when we look at crypto that Wall Street Bets token or coin is topping the charts at $483 from nothing. Literally, Daniele.
Which by the way, this token does not exist. This is a joke of CoinMarketCap. They put the token on top of the list.
Okay, there you go.
Yeah, to show that something serious is going on.
Right. Okay. So what we see is this this kind of idea of the Dodge, the Wall Street Bets coin above Bitcoin, but the reality is that we are seeing this across finance, and finance being the other half of DeFi, the financial markets, the ability to take these elements, these financial instruments, and drive them in a way that literally competes with what traditional known fundamentals are in the marketplace. And as Daniele and I have talked about a lot of us have talked about with our visitors and so forth, there are no more fundamentals. That should be the first thing. There are no more fundamentals to rely on that are the same as they were both pre-pandemic and pre-decentralization. Everything has changed. So Daniele, maybe you can jump in and talk a little bit about that, of why almost everything we know or have measured against is no longer of relevance, and it's oblique.
Yeah, absolutely. And so if you think about what DeFi introduced that never existed before, DeFi introduced for real the capability to program money on an open network. think about for a minute. Once back in the day, the banks or the financial institution launched the so-called open API, the open standard projects, that was not open because me and you were not able to build an application on top of a bank.
Right.
It was not possible. It was not open because we had to be validated by a central authority to grant me and you authorization with an API eventually to expose some users' data. Only users' data might be relevant for our application to do something. While now we're moving money. It's different. DeFi introduced first ever in human history the possibility to program money, build applications on top of it, and spread it to the world. It did not exist before DeFi this. And even more, if we look at Google Trends, if we look at what the big financial institutions are doing, how they're entering into the game of digital assets and DeFi, it's mind-blowing. The interest, consumer interest and institutional interest into the topic to at least understand and put a finger into it. I don't want to mention the trading volumes on Uniswap. It has been crazy last week in trading volumes. The liquidity onto some pairs like ETH, Uni, increased by a factor of 2 in a few days. So this means a lot of people putting liquidity into decentralized exchange. This is not something new. It's a little bit complicated for people that are entering into the game, but this means this is something that is booming. So, and I'm repeating all the time myself, it's worth educating, not buying tokens, educating what's going on, because 2021 is the year where unless you take this train, so you can ride it, but if you miss it, it will not come. At least it will not come in such a proportion. It will still running for a while, but it's the time to jump.
Well, and also I was just going to say, I see the power of social media as well. Like Mark Cuban has over 8 million followers, and he was talking about Ethereum and some of his, highly held cryptocurrencies and tokens. And it just shows the power of the people as well. When you look at the trading volumes, and there was like over $1.5 trillion in 24 hours that happened.
But I like very much what Mark Cuban said on CNBC, which, plugged with what Tim was saying before about Wall Street Bets and Reddit and all the rest, decentralized community versus centralized community. He said, all people talking about fundamentals. Number one, the guys on Reddit are not stupid. So they run fundamental analysis because it was not stupid what they've done, number one. And number two, who said that trading can only be done via fundamental analysis? This can also be done by momentum analysis, based on hype, based on speculators, right?
Right.
So this is something new. This is something new, actually.
When we dig in, we have to look at, and now we've kind of looked at the background of what happened, what's going on. And I think it's important to come back to where we go. Well, what does finance mean? What does this really paint the picture of going from here, in the world from here? And what are the takeaways from this? Because there's a lot of hype out there, and there's a lot of what I'd like to say are historic analysts. Okay, here's what's going to happen now. But let's look at reality. Let's look at some of these words that we're using and some of the things we talk about all the time, like liquidity. So I'd like to bring this really, really down to fundamentals about what are these things really doing? What are these trends really happening? And I'm going to point out a little company called Tesla. Now, I think Elon Musk, I think that's the guy.
I think
the wealthiest man for a minute or whatever. Really, the only or tweet. His tweets are entertaining, but the most interesting one was where he said, "Oh, that's interesting. Back to work," in signature Musk style, right? But let's look at cash flow. Let's look at liquidity. Daniele, you use that word liquidity all the time. I get often asked about all this work we do at BlockCerts. What's your revenue? How are you going to grow your business? What's your business model? Well, what would it look like if I said my business model is to have no cash flow for the next 7 years? Well, let's not get that extreme. 6 years, have no positive cash flow. And I'm going to become the wealthiest guy in the world. How would that go for me? Right? So when I say the fundamentals have been shifting for a long time, they have. And let's look at what happened. 2010, this is our cash flow, Tesla's free cash flow right there at 2010 up to 2019. Okay? Typical curve of a startup company, typical curve of a very long-term company that was provided liquidity from the market. So the first thing to understand is this liquidity pool stuff is a big deal, especially if you build something behind it, like an electric car, or at BlockCerts, a new cloud platform, a new type of cloud. It takes a long time for these things to move. But if the market's moving with you, if the liquidity's moving with you, the fundamentals that we taught in business school, and I can say that because I taught MBAs for a long time, those fundamentals no longer apply. The market's completely disconnected from the things that we thought we knew about business decades ago, or even 5-10 years ago. It's been disconnecting for some time, and really innovative companies and really innovative investors have been following this and realizing that that investment has to come and liquidity has to come to drive that success up. And then what happens? Remember that curve I showed you on GameStop? That's a short-term version of this exact chart right here. That hockey stick growth. Who else? How about these guys?
I was just going to say, Tim, if you superimposed Amazon with that graph.
I just did.
Yeah, I know you just did, but that was
There's
going
the other
through my
guy.
mind. There's the other guy. Yep.
And when we look at this, now look when this was written, 2018, look at Amazon's quarterly net profit. Once again, 1998 until 2004. No profit at all. And very, very slight profits, losing money many years until boom. These trends are the trends that have made the new model of taking what I like to say is true fundamentals, true utility forward. And it's not the first time that we've seen this, and it's not these new revelations that are really all that new. It's been established and well understood by many, many companies. So if I go back to Amazon for a moment and I look at some of the analysis behind that, we can look at what Harvard talked about in 2014 at Amazon. It's all about cash flow. It's always been about liquidity. It's always been about operating liquidity and free cash flow. So the interesting thing about that, this particular chart here that we're looking at, is that the operating cash flow was always increasing through liquidity, while net income and profit were intentionally kept low to create a massive scale. So now that we have, but there's always been an interesting gatekeeper, if you will. And that gatekeeper has been the big venture capitalists or Wall Street guys deciding when and where to place this liquidity. That's the fundamental difference. That is the fundamental difference, which is the gatekeeper is shifting to a more broad, decentralized market. It's now many different ways is there. The capacity to go out and bring something to market that maybe I can tell you with BlockCerts and my own personal history. Every time I've gone to a venture capitalist and I've said, oh, well, here's what you can do, or here's what the business plan is. If my charts look like that, they're like, well, what's your revenue? Well, what's your revenue? Yet a few of these companies get valued at massive scale because even if they have no revenue. Why? And I think I've used this example before when I was in Silicon Valley speaking with one of the attorneys that actually took Netflix public. And he said to me, Tim, I said, I just can't attract that kind of capital. I don't have revenue. He said, WhatsApp had no revenue and they got $19 billion from Facebook. Is that enough? So revenue has never really been a good indicator since technology came out of how successful a company is going to be. Liquidity, however, is an indicator. And if I can attract that liquidity, if I was talented enough to go get that liquidity, I could build an IM like Slack and then turn it into a $27 billion acquisition by Salesforce.com, right? Yeah, I was able to gain liquidity.
I was going to say plowing money back into the system to enable scale is the only way that you'll get scale.
That's right. That's right. So, and I'm glad you brought that up, Dan, because if this wasn't enough of a fundamental shift,
right?
Then the next one everybody that's listening should be aware of is plowing money into the system.
Right.
Our economics, if we go back to fundamentals and we look at GDP right now in the world from here, what does that look like for most countries? So today, India announced the largest capital flooding of the market in history of capital going into the market from the government. The US is going to put $2 trillion of new capital into the market. What are we going to do with this $2 trillion that's going to go out and create new businesses? What are you going to ask all those new businesses? What's your revenue? Here, I'll make your research really easy. Zero.
Right.
There's $2 trillion chasing rebuilding an economy. Your revenue, your fundamentals are zero. Start there, right? And these new business models are going to be establishing what the next wave is, what the next generation is. They're going to need new technologies. They're going to need new ways of doing that. And as Daniele said when we got on the call, he goes, why don't we tell people on this call what we're doing?
Because it shortens the learning curve, it shortens the technology curve, and it allows businesses to truly become digital.
That's
truly
right.
Digital.
That's right. So truly digital, what does truly digital mean? Does it mean that we take the same systems that we're building these business models, these massive business models? Microsoft's over $1 trillion now. Does it mean we take those exact same systems and that we're running traditional business models and use them the same way to do new business models? It's not going to work. It just fundamentally can't work. It doesn't even make sense that it will work to use businesses or even technologies that were designed for centralized business models to create decentralized digital businesses. Right. Yet there are trillions and trillions of dollars coming into the market. The question really then becomes, where's it going to go? Right? Where's it going to go? That's the art of figuring this out. And how is it going to get there? And what are the infrastructure systems that are going to be created to do that? Why is an electric car even feasible now? You can't run that thing unless it's charged up. A decade of charging stations are now out there, right? Infrastructure. Infrastructure evolves as trends start early and become taking off. Who are the infrastructure providers of that? And what is the infrastructure that's going to be created? That fundamentally is the picks and shovels of the next gold rush. And we all know that during the gold rush in the Yukon, few of the gold miners made it, but all of the where Levi's did really well for a very long time, for hundreds of years. The picks and shovels guys were the people that weren't out there chasing the gold, but were building the fundamentals. So when I look at these trend lines, we say, well, how are those trend lines going to be built? That's what we look at BlockCerts. That's true fundamentals. Like, these are the types of things we build, and we've been building for distributed applications, for data that can be used on a fundamental basis. And it's very frankly what Amazon did. They built brilliant logistics. They built brilliant tools to become the largest retailer and revenue generator on the planet for what they do. Similarly, Tesla did that. But look at the charts. Just go back and look at the charts. It's not hard to see. There's no real magic there. There is brilliance, but it's not magic. It's fundamentally makes a lot of sense.
Well, and Tim, I was going to say, because we've been talking a lot about LenderKey, one of our portfolio companies, and truly digital. I really love that word, because in the lending industry, for example, you can go online, you can talk to somebody, but is it truly digital? That's an industry that still has paperwork, still has clunky systems that are not truly digital.
Cars, Dan, driving around, going places.
Right.
This was before a world of masks and lockdowns.
Correct.
Right?
Correct.
This is the world from here, not the world from before.
Exactly. So truly digital means you don't need somebody to come out and take a picture of your driver's license.
That's right.
It means you authenticate someone online. It means that everything is made, decisions are made by companies based on online information, not paperwork going back and forth. So truly digital. And that really permeates into, Daniele, what you're doing at Fusion Funder, which is just phenomenal with crowdfunding. And you might talk a little bit about that as well.
Yeah, because it's bigger than what we can envision right now. Obviously, right. I'm much more keen to show how things work, in the platform, in the system. So it's not only about talking, but it's about showing what we're doing in the back and in the front of the system. But so right now, I think we're all aware that we have social media, so network of information. We're all aware, we're discussing right now about DeFi, which is and Bitcoin and decentralized finance applications. Those are essentially networks of money. They did not exist before, at least to such a level of an efficiency. But what is totally missing, it's the network of utility. That's right. Brand missing today. Because if you want to plug utility over those infrastructures, over those networks, you clearly have a gap today. So our positioning there is we fill the gap from a two different direction, which is technology and capital. And both of them contributes to create utility. And we cannot do without one of those two. So Fusion Funder is the platform that matchmake who raise capital, with whom is looking for capital, with a piece of technology. Again, technology, okay? Technology and capital. And the BlockCerts ecosystem, which is plugged in, embedded into the Fusion Funder model, creates additional utility throughout technology. So if you're a funder and you think about to do anything on top of what exists today, I think it's rather interesting to talk together with us, because thinking about, I went through this process several times in my career to build from scratch a company, study from the technology. I would never do it again in my life, because if you think about of not being a tech company, so if you want to build something on top of a technology, rather than you buy technology, but you have to buy technology that connects to you and to your clients to go to market the next day or the day after the next day. So it's all about having a truly decentralized mindset and to plug in existing business model in a truly ready ecosystem that connect technology and money to start the next day. This is something, I don't want to be, we are the first. I don't care to be the first, the second, or the third. To me, what really matters is to do it for real and at scale. Because being the first might not necessarily be the best or being the right one. But what we are creating, what we are doing right now, what we are empowering our clients with is to create, to empower them with effective tools to build their business and to make, to create an ecosystem where they can raise capital over time into several iterations.
And even to shorten that scale, the scale that Tim was showing there earlier, if you were able to shorten that scale by utilizing powerful technology, where would you be as a business? And that's what
we always it's very difficult to predict this. Yeah. We don't understand nonlinearities and exponential growth. None of us understand it because we are not wired to understand it. But what happens right now, we are at the beginning of an exponential trajectory, and I'm not talking about the SpaceX trajectory, but we are at the beginning of an exponential trajectory that we never seen in our life before. Okay, so the way we think about software, the way we think about money, is going to be redefined 2021. So better to start and taking a step into it.
Correct. To your point, Daniele, when we talk about that, it's this idea of getting our heads around new business models. But again, I want to point out that there are fundamentals here. There are really clear fundamentals. So I was asked recently by a very big venture capitalist out of Silicon Valley, well, defend your business model to me, which I did in a very long letter, and I defended it. And never heard back, but that's pretty typical. And so the reality is this is supposed to be a big crypto investor and really innovative thinker. And the fact is that it's who believes in what you've got or who can analyze and justify back to a foundational element how billions of dollars are going to be provided in liquidity. And I want to share this with everybody, which is, why did Microsoft then buy something called GitHub? Now, for those of you that aren't technology people, you won't, you may not know what GitHub is. It's the largest open source contribution community of software where developers contribute all this different technology and keep it up to date. Microsoft in 2018 paid $7.5 billion for a free platform. Why? Why would you do that? How does that make any sense? So the question is, it's an illustration of how value is ascribed differently in Silicon Valley than the rest of the world. Right? In other words, what were they really buying here? And as you go through this review, I love where it says it's the distinction at the heart of why a company with 5 people and no revenue can sell for $1 billion, while a company with 500 people and 100 million in revenue can sell for a fraction of that amount. Why is that? Why is it that a stock like GameStop can exceed $450 a share when there's no fundamentals behind it? What are the actual drivers behind that? Why is it that a cryptocurrency like Bitcoin, which is completely based on speculation, is worth $40,000 for one coin or token? What is it that makes that worth $40,000 right there when there is nothing that it does? There is no centralized government backing it. It's decentralized community believing in it. So these are examples of business models that do exist, that are very real, where real value changes hands and it becomes fundamental. GitHub provides us, to your point, Daniele, a massive amount of
huge value.
Huge value, massive amount of soft value. Well, if you're a Microsoft and you want to have an insight into an entire community, what better to spend your dollars on than to go grab something that effectively generates no revenue? Do you care?
Yeah,
of course not.
But if you ask to an analyst, a financial analyst, to run a fundamental analysis on Bitcoin, as many keep on doing it, right? They will smash, why Bitcoin is priced so high versus what is in the back, according to the fundamentals.
That's right.
Right in the back. What Bitcoin introduced, Bitcoin and also other currencies, Ethereum and the other, Bitcoin, to me, it's a little bit simpler. Ethereum is a little bit more sophisticated, but Bitcoin is very, very simple from this perspective. If I'm telling that Bitcoin is is a digital version of gold, no one will question about from a fundamental perspective, because you can transact almost real time from any part of the world. You don't need to custody this because you might need a wallet. You can keep it on a wallet and you can transact very, very efficiently. It's cheaper and you can transfer it 24/7. Is it simpler? It is simpler. Yes, it's simpler. Is it more efficient? Yeah, it is more efficient. Is it properly priced? Well, today, I price, or at least my understanding of this is I look at what is better. Is there any superior asset than that? And if it's yes, then I'm trying to make comparable. But into this very case, and I'm talking about Bitcoin, that's not a financial advice. I'm talking about Bitcoin just to give analogies, okay? So Bitcoin, to this extent, is a superior asset. It is deserving this price and even higher than this price. And we can do the parallel on what we're building, okay, on our side, trying to build a truly decentralized network where capital and technology are connected together. We empower founders with the tools that allow them to scale. They can buy Bitcoin if they like Bitcoin, but if they want to run their business, they need to have the tools to run their business, right? So,
and I want to point out something, Daniele, about fundamental analysis, because you did something very important there. I want to bring up to everybody watching this. You compared Bitcoin to gold, right? It can't quickly, easily move gold. I can't quickly, easily transact in it. I can't do any of that. So we removed the idea that Bitcoin does something more than as a store of value, but it's an easier, more transferable store of value. Similarly, when we talk, so that's one kind of fundamental. And when you're looking at this, it's really important to look at what are the fundamentals that are driving, or the utility that is driving that value. So if I make that analogy to the utility of a platform that's decentralized, is it better? Does it make more sense? Is it streamlined? You don't ask, well, what's the revenue per user? You ask, is it more efficient? Is it more malleable? Can we do more things with it easier? That's what drives these infrastructure fundamentals. So even these words we use of fundamental or technical analysis And when we're trading, we do different things. We look at, well, there's this emotional kind of day trade or technical analysis things that bots do now. And they're much more efficient at it than people. And they can make better predictions of what we think is going to happen. And then there's this analysis, like what we just saw with Microsoft buying GitHub or paying $26.5 billion for a big network called LinkedIn and things like that are utility. Those are completely disconnected, and they have been for a long time with Silicon Valley and technology acquisitions from what, again, back in business school, what we taught fundamental analysis was. It's a fundamental analysis today comes down to what is the likelihood that we're going to get, Dan, community?
Right.
Adoption,
community and adoption.
Influencer status. What about all those influencers out there? These YouTubers that are making hundreds of or millions of dollars, tens of millions of dollars individually. For every dollar that influencer earns, how much money does the network that's supporting the influencer earn? For every dollar, it's about 10 to 1.
Picks and shovels.
Yeah, so picks and shovels again.
Picks and shovels.
That's the fundamental. If
Right.
you want to invest in influencers, invest in YouTube. Wait a minute. You can't. Or can you? Sure, go buy Google stock.
Google.
Right? And these are the kinds of things that are really fundamental about where we're headed. The last thing I'd like to point out about this is the power of people. We say at Be Certain, our D app store, cloud power to the people, taking and decentralizing the power of cloud, giving it to the people through these D apps. But think about this. If we are right, we talk about the trillions of dollars coming into the market, but we also are removing friction, the friction of gold, which we talk about in software, which is a license or a seat fee, and we hand it to a new kind of dynamic out there, which is people. And there have been many, and I don't have those links to show. All these links will be in our BlockCerts Buzz, by the way. So if you want to get to these links, please subscribe to our BlockCerts Buzz, and all of this will be there. But the important point about that is that all of these people, 2.5 billion new people are going to be co-opted into the world because of decentralization. This is through mobile devices. This is through access that they didn't have before to the kinds of tools Daniele's talking about, microfinance. When we talk about crowdfunding, maybe we can break those words down in another world from here, which is crowd and funding and what that means. And there are lots of examples of that, which I won't get into as well. So if you know where to look, you can go and you can make a pretty logical investment in the future of your time to go find knowledge about what you would do next, giving all these transformations. And there can be no question, we're in a transformation of the world right now. There's a new economics coming out with governments dumping trillions of dollars into people's hands who aren't working to build new businesses, to support businesses in their countries. It's going to enhance globalization. There are new people coming into the market that haven't had access before that are going to get very powerful access and drive new powerful economics. So when we think about GameStop, stop thinking about that for a moment and, oh God, I wish I'd have been in at $9 and out at $4.50. Forget about that. I mean, that's a nice to have. Think about the fundamental of that. The fundamental utility to take away from that is this decentralized community influence-onomics is going to change the way we analyze and actually create new business models. That's what I love about Fusion Funder. I love that these business models are new. It's not just the businesses have always been there. They might be really innovative, powerful businesses, but you said it about LenderKey. There's Exodus satellites out there that, like, you know, we watch SpaceX. Pretty soon we'll have a cloud up there. Like, that's a fundamental utility. What's it going to look like? What's that trajectory going to look like? Think back about that electric car, that Tesla chart, right? There's going to be this massive shift and this massive investment in infrastructure that will return. And, you know, is it too long to wait 5 or 10 years or even 3 years? I think it's going to happen much faster in this next iteration. Seeing 100x times your money or 100x times the growth of your company because you adopted a new digital business model.
Yeah, well, we can take the example of Bitcoin. You know, it took from 2008 until 2017 to get to 20K, and how much time it take from when he get back to 20K. So in 2020, immediately he went to 40K.
40 doubled.
Yeah, immediately it doubled,
right.
And now he's on a spike trajectory that it might go even higher. Again, not financial advice. I'm not soliciting investment in Bitcoin, whatever. But
still planning things here. Let's just make it clear.
Yeah, but so this is the power of the network effect. Ethereum is on the same trajectory. Is even faster than Bitcoin right now. It has a completely different trajectory and different network effect, but still, both of them plus all the other tokens, the leverage in crypto is called pumponomics.
Right.
Pumponomics is a kind of the fundamental, or which is tokenomics at the end of the day in the token industry, which create a hype and pump to create such a big, steep network effect that creates scale and growth out of a company that was value is identified by the token. And this model, the token economy, so the value capture from a token, in our case, utility, it's something that fundamental analysis is not there, does not analyze the value of a business because of the utility token that is in the back. Because typically the value of the business is captured by the equity, so the value of the equity, according to some, the same usual metrics. But as Mark Cuban pointed out, perhaps we have to evaluate the business model not using the same the same old P/E
right.
price to earning ratio. We have to introduce new KPIs, new parameters to value whether the business is worth that amount of money. It's not only about equity, it might be equity plus utility, for example, in our language.
And I'd come back to also this idea of trustonomics. And what happens in these situations of influencing DeFi and things like that is we start embedding trust of the community. We get the community driving the idea that I believe in this, I think this is going to happen, and therefore we have this idea of transparency and trust driving through this economic system, as opposed to what we've seen in the past, where that trust or that information was a closed loop. It's now an open loop. And that gives us a broader base for which these things actually grow, these things actually occur. That's what decentralization is, back to your point or your question, Dan, earlier. Correct. Decentralization is really about that idea of a transparent market with fair information that gets out there, and people start creating businesses as well as patronizing those businesses, as well as investing in those businesses from a trust perspective, as opposed to an insider scoop perspective, or playing that financial game. And I think this will change the way everybody, Wall Street and a number of these types of professional investors, start looking at things. It's definitely rocked the fundamentals that were there before. But go ahead.
And Tim, just one thing I want to mention is that this is a massive shift in Main Street what's happening on Main Street. 30% growth a year in smartphones. There are over 1.5 billion individuals in the world that are unbanked. And just with what is happening in the world with adoption is key to everything. We have a huge scale of adoption that's transpiring right now at an unprecedented rate with individuals that haven't had access to some of these things as well. So there are people that have always been able to invest in the stock market and do those types of things, and there are new entrants into our new digital economy that will continue to scale this at an unprecedented rate.
That's right. And thank God we've got a digital economy right now, because if we didn't, we would have no economy.
Right.
And so, creating these structures around that digital economy to keep it as transparent and safe and secure, and start stabilizing how these business models are created is going to become really, really important. You want to create foundations, again, that infrastructure, and grow it in a logical way.
Right.
You don't want your self-driving cars exactly out on the street right now. We know they kill people. It's not quite there, but the electric's great. We've got infrastructure. There's been a decade worth of these things coming out, and now they're really starting to come into their own. And there's a lot of competition coming out there. So the other thing I'd say to people is, at what point do you want to be involved? Do you want to wait for it to get to that point where Bitcoin's at 40,000 and now you're thinking, well, maybe it'll go down to 30, maybe it'll go up to 60, maybe it'll sit here and fluctuate 20-30% a day, whatever. I don't know. Or do you want to be in at 50 cents or 10 cents?
And do you want to hope for a 2x or for 100x?
It depends on where you want to be. That comes down to your risk tolerance. If I build a business, if I'm starting a business today, Daniele, do I want to build a business that I go get all the exact same old tools? I get my, traditional video meeting. I go get some email. I go get another thing to do my billings and my credit cards. And I go get all those and try and put them together myself. Or do I want to launch a business with Fusion Funder and go, gee, I know I'm going to need capital. I know I'm going to need something to operate this thing. I know I'm going to need to stay in touch with anybody who might give me capital. And I know I'm going to need some innovative ways to get my product out there. Do I want to work with you, or do I want to go work with, building it the other way? Those are alternatives. But I think that we can see these trends are really driving those alternatives to either innovate or get out of the way. It's video store versus Netflix. I don't know how else to say it.
Well, and Tim and Daniele, I heard an executive this week say, if you have a financial relationship with a customer, you should have a token relationship with them, because this is where the world's going.
Yeah, and so there are obviously we going, in the coming weeks, I think we'll have a very steady plan of what we're doing, announcing every week, every second week, what is going to come. What we're just saying right now is what we're doing, what is available to jump in right now. But if you think about crowdfunding, because you mentioned before crowdfunding, capital and technology together.
Right.
What is totally missing today in crowdfunding is a secondary market, totally missing today. It does not exist. So every and any platform in the world, from US to Europe, because in Asia, crowdfunding is not so popular, they work in the so-called primary market. So to raise capital, seed stage, Series A, whatever, mostly it's a seed round, and then eventually go to private round. But then the journey stops. So this means companies are using crowdfunding as a mean to bootstrap, to raise some capital at the beginning, to involve the crowd, but the crowd participate to that investment in a very illiquid manner, because the companies sell equity. Okay, I'm talking about equity crowdfunding, not reward. But then if the company does not go IPO, what's going to happen to the investors? They contribute with their capital, whatever amount it is, they're stuck.
They're stuck.
Nothing happened. So now if we build a bridge and we say DeFi, okay, it's programming money on top of an open network where liquidity sits there because people contribute to liquidity, and then you merge the two, okay? Think about how many people can step into this investment. Today they don't, because they're afraid of investing into something that will never give a return.
Or they can't get out of. And it comes back to that idea of liquidity again. So kind of the takeaways here are decentralized is here. We're hearing it everywhere.
Right.
Crowd and community and this idea of the social influence on business models is here. And make no mistake about it, investing or not, it's a business model.
Yeah.
Like, you don't believe it? Go ask the guys on Wall Street. That's their business. Go ask the guys in Silicon Valley on Sand Hill Road. That's their business. That's how they make their money. This idea of DeFi and decentralization reshapes the fee model. There are many ways to step forward and get involved. And at the end of the day, it all boils down to decentralized and finance and liquidity. Or as the economists said it in their way, high tech meets high finance. As we say it here at BlockCerts, technology and money have merged. It's the same thing today. It's the exact same thing. And depending on what your mindset is in building a business, in looking to fund a business, in looking to get involved in a new economy, depending on what your mindset is, there's likely a model that gives you a pretty good roadmap of why these things will grow in the future. And we'll talk a lot more about that in a very structured way as we roll this out over our world from here in the future. But we're running out of time today. But this was a broad overview. We were asked for this. We were asked to come up with a very broad overview of what's really going on out there. Right. So I hope what we've shown people and explained to people is, look, the big companies you know of today, the big successes you know of today, they went through some form of trajectory like this. And a lot of them have had that exact same kind of hockey curve growth. It might have taken 10 years to do what GameStop did in 10 days, but it's there. And the second thing we've told you is it's happening faster and faster. And the third thing we've told you is these fundamental ideas of the market being flooded with information and cash flow, and capital is there. And infrastructure is bound to build around that. So take those kinds of things away from today's world from here and take them into the world from here, because that's what's going to create the future. That's what's creating the future that we live in right now.
It is great. So let's wrap this up. We're right here at an hour. Thanks, gentlemen, for being on here and explaining DeFi in more basic manner so that we can all continue to talk about this as we go forward. We'll have another one of these next week, and we can't wait to get into this again next week. We'll have, go ahead, Tim.
So subscribe below,
yes.
Put your questions in. We're here. That's how we came up with this one. Lots of questions are flooding in every single day about what's going on. I got a text this morning. Hey, Tim, can you tell me about crypto? I'm like, here, click the link and watch our.
Yeah, we have been keeping this channel for the time being among us,
right.
Among a few number of people following us since quite some time. From now onwards, we're going to open it up and building a truly vibrant community surrounding the same vision we want to bring on the ground and grow together.
That's right. That's right. So with that, I'd like to say, stay safe, stay healthy, and get digital. Digital is the future. Decentralized is the future of digital.
Great. Thanks for joining us, everyone.
Thank you.
Thank you.
Take care.